We are seeing a large influx of expats moving to the kingdom. I think in the last 12 months, the government recently reported that there was a six-fold increase in the number of professional expats living in the country, and that's grown to 1.2 million. Saudi Arabia's population, of course, sits at around 35 million today. I mean, look, Saudi Arabia has been the fastest growing economy amongst the G20 last year, with economic growth coming in the high eights or low 9%, depending on the source you look at. And that is a result of the National Transformation Plan that is touching every aspect of Saudi's economy. I mean, all we need to do is look at the PMI indicators for Saudi, which are the purchasing manager indices, which give us a reading of how businesses feel about life. And for the last 3 years or so, they've been in expansionary territory, which means businesses are growing, they're recruiting, their order books are full. And that is quite a stark contrast to the narrative we hear from elsewhere in the world, where there's continuing talk about a soft landing or potentially a global recession. But within Saudi itself, there is so much economic activity linked to Vision 2030 and such a large, dynamic, young population that is sustaining that domestic economic growth, that is creating all of these jobs, which are centered in Riyadh, which is where the population is growing the fastest. And indeed, that's where the population is expected to go from 7.5 million today to about 18 million by the end of the decade.
This is the 966.
We are pleased to welcome back to the 966 Mr. Faisal Durrani, partner and head of Middle East research at Knight Frank, the global residential and commercial real estate consultancy with a significant presence in Saudi Arabia, with offices in both Jeddah and Riyadh. And Faisal, we are excited to ask you soon about your new offices in Riyadh, which we understand are quite modern and lovely. Knight Frank offers a range of services in both consulting and transactional, and has 7 total offices in the Middle East region. Recently released a comprehensive, beautiful 75-page report on the markets. Faisal, welcome back to the 966. Nice to see you again.
Thanks, Lucian. Great to be back. And hi, Richard, as well.
There's some big picture things that this survey touches on. Can you start with that? Planned construction is the largest construction site the world has ever known, just to give us a context of the scale of this.
Absolutely. So, Richard, you're right. I mean, the backdrop or the context for our survey is tremendous. We are currently tracking, as you said, over $1.1 trillion worth of real estate and construction projects around the kingdom. And that includes 550,000 plus residential units, more than 6 million square meters of office space, more than 4 million square meters of retail space, and actually over 310,000 hotel room keys now. So that's gone up slightly since we last spoke. And that includes about $200 billion worth of infrastructure projects that are going to be needed to support the tremendous real estate development, including $150 billion or so that's being spent on upgrading the main airport in Riyadh, which, when fully completed by 2050, will be bigger than Dubai International and London Heathrow combined.
Wow. So
it's amazing.
So let's get what appears to me, and I don't want to get too far ahead too fast, but since we talked to you, it seems like this breakneck speed of construction and investment has resulted in a significantly changed real estate market, residential particularly, and particularly for Riyadh. Can you give us a quick sort of overview of what's happening now in the residential market for but Riyadh, because it's such a central focus of 2030, but also Jeddah and Dammam and elsewhere?
Sure. So our new report, which we publish annually, which is called the Saudi Report, was published 3 or 4 weeks ago. And this year, we've actually undertaken 3 different consumer surveys to gather our data. The first survey we undertook was of more than 1,000 Saudi national households. And the goal here was to try and get a better understanding of the depth of appetite to rent or purchase residential property in the kingdom. One of the first things we wanted to do was sort of get a grasp or a handle on the depth of appetite to buy a home. So when we ran this survey last year, we found that 84% of Saudi households wanted to buy a first or second home during 2022. Now, that figure in 2023 has actually slipped to 40%. So that's quite a significant reduction in that appetite to buy a home. Now, the answer for that reduction isn't as black and white as I would like it to be. There's a number of complex factors that are working together, but chief of those is linked to affordability. One of the things I think we touched upon when I last spoke with you was the growing concern that we had around the rapid rise in residential values. For context, somewhere like Riyadh has seen house prices increase by 26% in the last 12 months. And if we're looking at the market over the last 2 years, apartment prices in Riyadh have increased by over 50%. And not to be outdone, villas have also seen a 32% increase in values over the last couple of years. Now, clearly, people's incomes haven't risen at that same pace. So what we're finding is that people are being forced into a holding pattern whilst they save bigger deposits so that they can either make that transition from renting to owning or purchase a second home.
What's driving this demand? What's pushing up the prices and dampening, buyers' enthusiasm for getting into the market?
Well, I mean, look, one of the core pillars of Vision 2030 is providing world-class housing for Saudi nationals. And the government has launched a range of programs such as WAFI or Sakini to try and ease the access to getting on the housing ladder through providing easy access to debt financing, through the provision of homes that are more affordable. And that has excited the population. And so have the Giga projects. So there's a whole group of aspirational buyers in Saudi who are trying to get on the housing ladder. And the supply doesn't exist yet to cater to that depth of demand. But not only that, we're also seeing, cultural shifts in the market that are driving that residential demand. We're seeing household sizes, for example, declining because we've got younger Saudis who are moving out of their family homes at a younger age in search of career opportunities elsewhere in the kingdom. It is now more culturally acceptable to live in an apartment rather than a villa. It's also more culturally acceptable to raise a family in an apartment rather than a villa. So we're seeing cultural shifts taking place beneath the data, if you like. And we have to remember that 56% of Saudi's population is below the age of 35. And it is this young group that is creating that additional residential demand that is putting upward pressure on house prices. And with that rapid rise, we've actually seen a 25% decline in the number of homes sold in the kingdom in the last 12 months. But if we look at the total value of homes sold in the last 12 months, that's only fallen 4%, which really highlights that strong increase we've seen in house prices.
What role, and you're talking about Saudis who are the aspirational aspect of young Saudis. What role, as our viewers, many viewers would know, that Saudi Arabia has instituted a regional HQ mandate, in essence, which takes effect January 2024, which requires anybody who's doing business with the the Saudi government needs to have a regional headquarters. And it used to be Riyadh HQ, but now it's regional. So you can actually do it, I think, in not only Riyadh, but also maybe Jeddah as well. Is that correct?
Our understanding thus far is that those HQs need to be in Riyadh.
All right. So, and is that another element in this tight market and increasing prices?
Well, as things stand, home ownership is restricted to Saudi nationals and long-term expats in the kingdom. But we are seeing a large influx of expats moving to the kingdom. I think in the last 12 months, the government recently reported that there was a six-fold increase in the number of professional expats living in the country, and that's grown to 1.2 million. Saudi Arabia's population, of course, sits at around 35 million today. I mean, look, Saudi Arabia has been the fastest growing economy amongst the G20 last year, with economic growth coming in the high eights or low 9%, depending on the source you look at. And that is a result of the National Transformation Plan that is touching every aspect of Saudi's economy. I mean, all we need to do is look at the PMI indicators for Saudi, which are the purchasing manager indices, which give us a reading of how businesses feel about life. And for the last 3 years or so, they've been in expansionary territory, which means businesses are growing, they're recruiting, their order books are full. And that is quite a stark contrast to the narrative we hear from elsewhere in the world, where there's continuing talk about a soft landing or potentially a global recession. But within Saudi itself, there is so much economic activity linked to Vision 2030 and such a large, dynamic, young population that is sustaining that domestic economic growth, that is creating all of these jobs, which are centered in Riyadh, which is where the population is growing the fastest. And indeed, that's where the population is expected to go from 7.5 million today to about 18 million by the end of the decade.
So, and that's a big number. What is the government? And I say government because one of the leading housing entities is Roshan. What is the government doing to try and get ahead of this? Because clearly there's a huge demand that's required and that's not sufficient at the moment.
So look, there's a number of things that are happening. I mean, if we want to create a second global hub city in the Middle East, be it Riyadh or any other city, we have to look more closely at the livability and habitability of Saudi cities. And what we've seen is well-being has actually been placed at the heart of government plans. For instance, in Riyadh, there's a program called Green Riyadh, where $23 billion is being spent on planting 7.5 million trees and creating hundreds of new parks and public spaces. We've also got something called the Riyadh Sports Boulevard, which is being built at a cost of $500 million, which is going to be over 100 kilometers of jogging tracks, cycling tracks, and associated retail, such as cafes and boutique hotels. So there is a much, much greater focus now on improving, as I say, the habitability and livability of Saudi cities. But at the same time, you mentioned Roshan there. Now, that is a really good example of a developer that is creating residential communities. As I mentioned a moment ago, a large proportion of the population is young and classed as millennials below the age of 35. And a big group of these young Saudi millennials have been educated overseas, typically in the West. And they're now coming home and they've got very particular expectations and they know exactly what they're looking for, which is why we're seeing a sharp increase in demand for community living. So young Saudis don't necessarily want to spend a long time in traffic commuting to drop their kids off at school, or commuting long distances to work, or traveling very far to get to a supermarket, a shopping mall, or a mosque. And we now see the demand for having all of these facilities within walking distance in a self-contained community with shared facilities and amenities is rising. And that wasn't necessarily the case in the past.
There's so many cultural themes and transitions that are buried in. There's nuggets everywhere in this report. One of them was on specifically on those community living. You found that not only young people are gravitating towards it, but people on the higher end of the wealth spectrum, at the higher level of what they're looking at, a more expensive piece of property, are also gravitating. They are partial to that community living, which again seems counter to the traditional way they have gone about organizing their family structures, which is usually 3 generations in the same place.
Yeah, absolutely. I mean, the impact of domestic migration in Saudi, I think, cannot be understated. Our strategic consulting team has done quite a lot of work in this area, trying to quantify the volume of domestic migration taking place. And in our study, what we found is 68% of everybody we spoke to actually classes themselves as being temporarily resident in the city in which they live and work. So that suggests that they've come from another city inside the kingdom. And what's really fascinating is of that group, about 74% are telling us that they would like to live in a smaller home. And 62% would rather rent than buy. So these are quite significant changes that are taking place because typically most Saudis want to live in a large villa, 3 or 4 bedrooms, that isn't typically in a gated community. But that dynamic is shifting. And when we examine the demand for apartment living between those who are migrants in a city and those who are indigenous to the city in which they live and work, we see that 42% of those who are migrants are partial to buying an apartment. But if that individual is from that city, that's their hometown, only 15% are interested in buying an apartment. They still want a large 3 or 4 bedroom villa. And the issue we've got right now is budgets are hovering roughly at about 1.5 million riyals. And if you're looking for a high quality 3 or 4 bedroom villa in Riyadh or Jeddah, it's going to cost you anywhere in the region of 2.4, 2.5 million riyals up to 3.5 million riyals. So we have a huge discrepancy between aspirations and reality. And we've done a piece of analysis looking at the ratio of household incomes to house prices. Essentially, how many years worth of salary do you need to save to be able to buy a home? So typically around the world, what's considered affordable is about 6 times your annual income because you will make a deposit of 10 to 20% and then you will secure a mortgage or other financing to make up the rest. So today, if you're looking to buy a villa in Jeddah or Riyadh, it costs anywhere between 13 to 15 times your annual household income. So we've clearly breached what is considered an affordable threshold. So that too is playing a part in driving demand away from villas towards apartments.
Yeah, Faisal, we talked about this a few weeks ago, but I asked Jerry Inzarello from Diriyah about this, and I sort of said, like, what is the most important thing about what's being developed in Diriyah? And he said, it's really important that the people that work here get to live here, not just on the development of Diriyah, but also that are working in Diriyah get to live there so that they get to enjoy a full life in Diriyah. And I'm wondering is there a concerted effort to provide affordable housing? I mean, is there how do they bridge that gap that you just talked about?
I mean, it is a challenge and it's probably easier said than done. And actually, one of the big opportunity areas that we've identified as a result of our survey is in the residential space to deliver homes that are more affordable, in inverted commas. Now, over the last couple of years, we've seen land prices soar. We've seen construction material prices rising globally, which makes it quite difficult to actually deliver something that is affordable. However, one of the areas that we feel is still ripe for further focus is around townhousing developments. We've got very few examples of those in Saudi, and every time they've been launched, they've been hugely successful. Now, townhouses, by their very nature, are similar to villas. They offer that privacy, and crucially, they come with that outside space. And when provided in a community setting, they do extremely well. So that is one way of bridging that gap. But the second and more interesting way is around something called MMC, or Modern Methods of Construction. And that involves things like modular construction, offsite manufacture, or 3D printing. Now, I accept that those aren't necessarily mainstream construction methods anywhere in the world yet, but when combined with traditional construction methods, they can certainly help to alleviate some of those cost burdens and some of those time constraints, because we're looking at delivering a huge volume of residential supply in a very short period of time. And through the 2020s, I expect to see a much greater focus on these MMC methods, not just in Saudi, but elsewhere in the world. So I think that's how we would go about bridging that gap.
And is there a lot of, go ahead, Richard, sorry.
Go ahead. Just
a quick follow-up. Is there a lot of interest in the investment in, the development? Like, is there a lot of speculation going on, for investors in this space?
At the moment, no, because as I said before, home ownership is restricted to Saudi nationals and long-term expats rather than international buyers. But there is discussion that that law might change soon. And I think if we think about things like the Giga projects, it is very much our expectation that the bulk of homes delivered there will be priced north of $1 million, or about 3.8, 3.9 million riyals, which is well above the budget of an average Saudi household. So in order to create demand or facilitate demand for those more expensive homes, we are going to have to look at other markets.
We mentioned Roshan, which is a PIF-owned, PIF, public investment fund owned construction company, essentially housing. And is there a robust private sector element in this housing market? Are there private companies that are recognizing the tremendous need for more stock, and are they building?
There are private companies, but most of what we see and most of what we're talking about is being delivered by quasi-government or government-related entities at the moment, just because of the sheer scale that's involved, as well as the fact that quite a few of the domestic developers may not necessarily be accustomed to delivering the volume of stock that is required.
It's a challenge, and I know. For example, PIF recently invested in 4 Saudi construction companies, contracting companies. I really don't know. A lot of those may be other kind of projects. I don't know how much housing they do, but getting domestic, they need that engine to kick in, that part of it to kick in to really hit, keep up with pace. So it's a really tricky thing to accomplish while you're pushing so hard and providing, government funded, essentially housing.
There are programs in place at the moment where domestic developers and contractors are being transitioned into being national development champions, because they have to go through that growth cycle pretty quickly. Another sort of area that we feel could be explored a bit further is something called the master developer delivery model. It is where you look at a large-scale project that involves thousands of land plots. The developer or controlled master developer only builds out a few of those plots, and the remaining plots are then sold or built out by other contractors and developers, but with very specific guidelines in place. We've already seen an example of that in Dubai Marina, which is an Emaar master planned community. They developed a handful of plots, and the remaining plots were then sold off to private investors and developers, and they were allowed to build within certain constraints. And that sort of allowed the developer to sort of rise above the detail of worrying about putting everything together and take more of a strategic view of the development. How does that development fit into my city? What is the infrastructure required to support the growth of my development, for example?
Interesting. That is interesting. One of the nuggets, and Micah, this survey, again, this report is like California in 1849. You go out there and there's nuggets everywhere.
It's so good.
But it was interesting. And it speaks to people like Lucian and I who live around the Washington, D.C. area, which is kind of a transient area. And it's not comparable per se. But one of the nuggets that came out of it is, in your survey, among Riyadh residents, just over half, 53%, were born in the capital, considered it their home. In Dammam, this figure is 58%. And in Jeddah, it's almost 2/3. It's 66% of respondents were born and raised in the city. So it's interesting how Riyadh is sort of becoming the test case for the new Saudi residential consumer.
Yeah, you're absolutely right. I mean, this is Riyadh is being positioned as a new commercial nerve center for the kingdom. It is at the heart of all the job creation that we're talking about. This is where businesses are relocating. This is where the infrastructure is going into to facilitate the emergence of a new global hub city. And young Saudis are gravitating towards Riyadh for jobs. And that is what is driving some of these shifts in the demand dynamics that we talked about. Like I say, 62% of them would rather rent than own. And to date, that market hasn't really been paid too much attention to, which is why another area of opportunity we feel that exists is around the build to rent space. Because we've got this group of young Saudis looking for short-term-ish accommodation, which they will want to rent rather than buy. And we don't really have vast quantities of studio or one or two bedroom apartments in Riyadh. And on top of that, we don't actually have international BTR or build to rent operators present in Riyadh that operate elsewhere in the world, that have large portfolios under their belt, that have huge experience in creating successful build to rent communities. And they are increasingly conspicuous by their absence, not just in Saudi, but the wider Middle East.
Faisal, you mentioned keen interest on the part of folks going into the housing market in the Giga projects. Is this across all of them, or can you tell us a little bit about that?
Sure. Now, one of the things we've done for the second year running is create a little bit of a league table of popularity amongst the Giga projects, and
let's hope nobody gets relegated.
Well, you say that. I mean, we asked a very simple question. Which Giga project would you most like to live in? And when we asked this question last year, NEOM came out head of the pack, and that was closely followed by the Red Sea project on the west coast of Saudi, and then Diriyah Gate in Riyadh. When we asked the question this year, we've seen a little bit of a shakeup in the popularity league table. NEOM still hanging on to first place, but in second place, we now have Jeddah Central,
Wow.
$20 billion project based on the historic districts, based in the historic part of Jeddah with 17,000 homes. And in third place this time, we have King Salman Park, which is in Riyadh, which will be the world's largest urban park and residential community. And we see the Red Sea project and Diriyah Gate pushed into fifth and sixth place, respectively. Now, why, you ask, have those two projects fallen lower down the popularity rankings? We actually feel that somewhere like the Red Sea project is an easy one to explain. It is the most advanced in terms of its development, and it is very clear that the focus is on creating a luxury holiday destination with perhaps an emerging luxury second homes market. And given what we said earlier about average budgets being around the 1.5 million Riyal mark, it's quite clear that most average Saudi households are unlikely to be able to afford the residential product that is planned there. So they are turning their attention to projects that they perceive will be more affordable, and also those that have perhaps been in the press more recently.
That's fascinating on the Jeddah Central, and because not only is Jeddah is a different kind of existence than Riyadh, but the prices have not gone up as steeply. That's interesting, and these are like consumers everywhere in the world. They weigh all the factors and they make a decision.
Prices have not gone up as steeply in percentage terms, but when you're looking at villas, for example, Jeddah has historically been more expensive than Riyadh to buy a villa because of land constraints. So Jeddah still does remain more expensive to buy a villa than Riyadh today.
Interesting.
Given the youth population, the large youth population that you mentioned, is there a stronger interest, maybe it's a way to phrase the question, in smart cities and that element of these Giga projects?
Good question, Lucian, but I don't have the answer for you.
Report number 3, 2024.
This is really hard thing to do. We're trying to stump Faisal, and it's hard to do.
It's just it's such an amazing topic. We've talked about this, Richard, on the show before. Real estate touches everything, so it's so fascinating to us and really to everyone. So,
and I was curious in this report, because Knight Frank has done the best job, as far as I can tell, of anybody in tracking the Giga projects. Detailed, where they are, where they are in the progress, and the scale of each project. I'm curious about two things. One, what qualifies as a giga project?
So giga projects typically cost in the billions of dollars, and they are mixed use developments. Typically on a greenfield site that includes thousands of residential units, plus every other asset class is covered as well. So that is how we define a giga project, and there's currently 15 of those that we're tracking.
All right,
Wow.
and how does that differ from a mega project? By the way, this is a side conversation Lucian and I have had, and we don't have an answer.
Isn't it under 10B? Isn't that the number?
I thought Giga was 10 billion, but
Yeah,
Oh,
well, I mean, we don't have a definition for
all
mega
right.
projects. I haven't used that term. I don't think we use that. It's giga or nothing, I
that's
guess.
right. So you would include CAFT in that KFD in the Giga projects.
Because it's mixed use, yes.
Yeah, yeah.
Yeah.
Well, and I was curious because didn't know if something had gotten relegated. Because in an earlier iteration of Giga Products checks, you had 15. In this report, you guys have 9. And it may just be a editing decision, but anyway, I wasn't sure if something had actually changed, but it sounds like you're still tracking 15 Giga projects and proceeding. Just fascinating stuff. Let's talk a little bit about there's new components in the report this year that you guys, again, because you're trying to get a comprehensive view, and you tried to assess Saudi attitudes towards healthcare, education, branded residences, retail, hospitality offerings. Can you, whatever depth you'd like to go to, can you talk a little bit about those things? And also, I'd be interested in why Knight Frank decided these should be in the survey.
Okay, let's start with branded residences to wrap up the discussion on the
Great.
residential sector. Branded residences is a really interesting one. We actually tried to gauge the appetite to buy branded residences last year. And amongst those who are classed as homeowners, the interest was less than 10%. And amongst first-time buyers, it was less than 5%. This was quite surprising to us because in nearby Dubai, which is currently the world's largest branded residential market by number of units available, we know that Saudi nationals are amongst the top buyers of branded residential product in Dubai. And so it was quite surprising that they didn't feel the same way about branded residences inside the kingdom. And we feel that that is linked to a very limited branded residential offering, and perhaps not necessarily a true branded residential offering has been made available. We've seen instances of residential property that has been furnished with luxury branded furniture that has been classed as branded residences. And of course, that isn't what a branded residence is. This time around, we provided quite a detailed definition of a branded residence, explaining that it comes with luxury services and amenities, usually courtesy of an adjoining luxury hotel brand. And when we did that, we actually found that a pretty extraordinary 69% of Saudi respondents say that they want to buy a branded residence this year.
Hmm.
At this point, I probably ought to say that our survey is better reflective of aspirations than reality. But Lucian, you'll probably appreciate that sentiment is often a far better indicator of capital allocation than deals themselves. And so, with that in mind, it tells us that depth of demand for branded residences is really high. And that is why we wanted to look at it. However, when we look at budgets, again, 69% are willing to commit just 750,000 riyals for a branded residential property. And it is going to be very difficult to afford a branded residence at that, price point. So that is why we wanted to look at that sector in particular, because we feel even if we move slightly further up the sort of budget spectrum, one of the things we wanted to assess was the depth of second home ownership in the kingdom. Now, last year, that number came in at about 44% of existing homeowners wanted to buy another home. And this year, we find that number is virtually unchanged at 40%. So despite the steep increases in house prices, this segment of the market is still very keen on buying a second home. However, to date, there are very limited offerings available for second homeowners inside the kingdom. Um, and so, a third area of opportunity we feel lies within the branded residential space. To create and develop a vibrant, thriving branded residential market, we need to be partnering with the right brands offering true branded residential product. And that will help to cater to some of this pent up demand from second home buyers. And look, we're already starting to see that. You've got the Shangri-La and the Four Seasons coming into Jeddah. So it is starting to change slowly, but the branded residential market is still very much in its infancy in the kingdom.
So that's very interesting, and it is fascinating to hear as you dive down into the actual, wording of a question and how it's understood. But let's follow along on where you just took us, Faisal, because at the end of the report, really interesting section called "The Opportunities," and you've given us extraordinary insight on the residential, and now and one was, there's 5 that the report outlines details, and the second is branded residential market. Let's just go ahead to the third, if that's okay, and that's healthcare and education.
Sure. Look, we talked a little bit about the increased focus on the livability and habitability of Saudi cities. We've talked about how the government has targets to, virtually double the population of Riyadh, and attract international white-collar workers to come and live in the kingdom with their families. So in order to do that, we are going to have to increase provisions around healthcare and education. And right now, there are 19,000 hospital beds that are under construction, being built at a cost of about $14 billion. There's 80 new schools and universities under construction being built at a cost of $8 billion. One of the things we did in our survey was try and understand attitudes towards the local healthcare offering. And what we found is that 40% of Saudis actually travel abroad for elective or essential medical treatments. And the primary reasons cited revolve around quality, the quality of the treatments available abroad, the quality of the medical professionals available abroad, or perceptions thereof. And in order to try and stem that flow of Saudis going abroad and ensure the success of these hospitals and clinics and medical facilities that are being developed, we are going to have to partner with the right international brands to relieve that perception or negative perception around the quality of healthcare in the kingdom. And the same is sort of true when it comes to schools. Over half of Saudi parents want to send their kids to a private school. And when you look at the curricula menu, if you like, the preference is very much for either a dual language curriculum or the American or British systems that closely follow. And the preference for international curricula actually rises with income. And again, with the volume of schools being planned, we need to make sure we bring in the correct brands to allow the success of these schools. And I guess the final point on that is the significant role that schools can play in anchoring residential communities. We've got excellent examples in Abu Dhabi and Dubai where schools actually create demand for housing in the surrounding area and drive up house prices if that school is of a high quality and has a high reputation in the community. And furthermore, we know, for example, a 2,000 desk school attracts about 1,200 unique visits twice a day. And these are parents that are picking up and dropping their kids off. So if you have a retail facility nearby, you've automatically created feeder traffic for that. So I think the importance of having a high quality school at the center of a residential community should not be underestimated.
Yeah, and in the report, Faisal, it's almost like a uniform response. Right at about 70% of people said that daycare, schools, universities, technical institutions, adult education, 70% of people say that's very important to them, or important. I think use the word important to them. That's consistent. That's wild.
It is consistent, and it's reflective of the fact that, again, coming back to this point on the demographics, we've got such a large young population, many of whom have been educated overseas, and they understand and appreciate the importance of having an international degree and then coming home and trying to make a difference and contribute to the economic transformation taking place. And they want the same for their kids.
Yeah.
We could go off on so many tangents there, and it's fascinating to me. And anything that Saudi Arabia tries to do, it's never a straight shot. There's a multiplicity of elements that they're trying to handle come in together at the same time, because just this has so many factors. But let's go to number 4 on the opportunities, and that's the hospitality sector.
This sector, I think, alongside residential, is probably one that is undergoing the most significant transformation right now. As we said a few minutes ago, we're tracking about 310,000 new hotel rooms that are being planned around the kingdom, and we guesstimate that will cost in excess of $110 billion to deliver. This, of course, comes in parallel to the vision of the government to attract 100 million visitors to the kingdom by the end of this decade. Now, one of the things we wanted to do was also investigate developments in secondary and tertiary cities around Saudi, because without adequate investment in these cities, we are unlikely to continue seeing the emergence of what is already a very vibrant domestic tourism market. So what we found is, very positively, that 65% of Saudis already travel within the kingdom 1 to 3 times a month. And they do that typically for work, for religious reasons, or to take advantage of regional cultural and entertainment festivals that take place. But what was really interesting for us is when we asked Saudis where they typically stay when they travel within the kingdom, it was only about 42% said that they stay in hotels. Another 20% say they stay with friends and family, 20% prefer service apartments. So we wanted to really understand why 60-odd% of Saudis choose not to stay in a hotel when they're traveling domestically. What are those reasons that force them or drive them to consider alternative options? And we've actually got the results segmented by age or generation, if you like, within the report. What I found quite fascinating is the millennials and Gen Z or Gen Z group, and these are people below the age of 35 and 25 respectively. For them, cost considerations are actually a lot lower than people who are over the age of 45. Pretty ironic, given that is the group that is struggling to save deposits to get on the housing ladder. But overall, what was interesting to see is that barriers or dampeners towards staying in a hotel domestically are around location and quality. And so this is going to be really important for hotel developers or hotel investors going forward, because we've got the domestic population commenting on the quality and location of the facilities available. So this comes back to providing world-class brands as a start. I mean, a city like Riyadh, we've only got 30,000 odd hotel rooms. For contrast, Dubai, we've got 140,000 hotel rooms, albeit that's amongst the highest hotel room concentrations in the world. And so we simply haven't got enough rooms to accommodate the volume of people we're expecting to come and visit. And for those that are cost conscious, only 17% of what is planned falls in the 3-star and below category. And we do have a group of Saudis that is cost conscious. So we are not addressing that group at the moment at all. And when it comes to the millennials, when it comes to the Gen Zs or Gen Zs, we need to be thinking about luxury glamping sites or youth hostels, albeit with local cultural sensitivities in mind. And we're not seeing that development yet, which is why we see that as another big opportunity area.
Fascinating. So, Lucian, you're a millennial cohort group. You just want to go to a nice place no matter the cost.
Is that so much to ask?
But let's go. Let's go to that 5th opportunity, Faisal, the experiential retail.
Yeah, I mean the retail sector, like everywhere else in the world, was one of the most significantly impacted by the pandemic. And what we've seen is a much more focus by retail developers, mall owners, mall developers on creating what are called lifestyle retail developments. And this is where there's a much greater emphasis on food and beverage outlets, as well as entertainment, and in the case of Saudi Arabia, specifically cinemas, which tend to attract large crowds. Now, one of the things we did in our survey was actually try and understand what type of retail format people prefer to do their shopping in. And surprise, surprise, shopping malls are still really popular. But once you start segmenting by age, we actually find that the Gen Zs or the Gen Zs, so these are people below the age of 25, least prefer shopping malls amongst all the other age groups. And when it comes to online shopping, they prefer online shopping more than any other age group. And of course, throughout the pandemic, online shopping has boomed globally, and we see that in the industrial warehousing space with a surge in demand for distribution warehouses, last mile logistics facilities. And so for mall owners, mall developers going forward, does that spell the end of bricks and mortar retail as we know it? Probably not. But what it does mean is we need to pay much closer attention to the incorporation of entertainment into our retail developments. I mean, you need to think about things like stores that offer heavy personal customization of goods, stores that offer a showroom concept, stores that incorporate F&B, for example. And those are probably glimpses of what the future of retail will look like.
Mr. Faisal Durrani, partner and head of Middle East research at the global real estate firm Knight Frank. Faisal, we could do this over 4 hours, and I'm gonna suggest that we put a bow on it now. And Richard, we have to expand this next year because there's just so much stuff, and it's all in this report. Please go download it from Knight Frank's website at knightfrank.com. It's 75 pages of data, and you can see from Faisal, it's just it touches everything. So, Faisal, thank you so much for your time today. This was awesome.
Thank you, Lucian. Thank you, Richard.